with all due respect to the folks at the Stock Almanac, remember we had a special guest on 2 weeks ago from there. I continue to say that the Santa Claus rally actually began on October 27th, and that momentum is building into one of the best Novembers on record. And if history is a guide, this market could end the year with a bang, one heck of a bang. By the way, November, 8.9%. You can see one of the best gains in the history. This goes back to 1939. Very rare that we've seen this kind of move. And you got to admit, you're loving it, right? Now, here's the thing. December's are pretty good, right? The trend continues. December's typically up 1.5%. If history repeats itself, it could be absolutely fantastic. Here's what people are really concerned about. A lot of gnashing of teeth over this, right? The Magnificent Seven. Still a major part of this. Up 71%, the Magnificent Seven. All year long, the experts told you, don't buy these names. Up 71%. The rest of the market up just 6%. By the way, I started with the T's, my stock of the week. Tesla, $17 billion short. They've got a big Cybertruck event going on today. I think if you see a short squeeze in Tesla, forget about it. It's going to spread. There's going to be a squeeze everywhere. But there are reasons to be cautious, right? Let's take a look at the so-called fear index. Investors might be a little cocky. Look at this. We're down at 12.4. I mean, historically under 20, it's considered like, you know, hey, Katie barred the doors. People are too cocky. Down here, forget, I don't even know the last time we've been down this low. Oh, I know. It was January 2020. So, again, you got a lot of things working for this market. Maybe at this point, the big question, though, is are we just ahead of ourselves, right? So with earnings behind us, it really comes down to bond yields, I think, more than anything else. And that means we're back to rooting for bad news, or at least negative economic surprises. What happens when we get negative economic surprises? Well, here's your blue line. As we've gotten those negative economic surprises, look what the market's done. It has made a huge move. But my first guest of the show says that there's no recession, that sticky inflation is going to get down. We have 3 to 4% nominal growth. In other words, the economy is going to be in pretty good shape. I'm going to bring in Bianco Research President Jim Bianco. And Jim, I read where you say economic expansions don't die of old age, that they're murdered. I'm like, oh, man, that sounds scary. What exactly does that mean?
The natural state for an economy is to expand, and given everything else, it will expand. And then you get a pandemic, or you get a crisis like an oil price spike, or a financial collapse like we had in 2008, and that usually breaks the economy into recession. So in other words, it won't just die because the calendar turns to 24 and things are rolling over. You need something to happen to break it. And those are usually what, Donald Rumsfeld called unknown unknowns. Now, one of those could happen at any moment, maybe the Middle East, maybe something else that we're not expecting, and that could change the equation. But until then, the trajectory for the economy will be to expand, will continue to be growth, and I think put higher pressure on interest rates to go higher.
Did I read correct, though, that you think maybe, so you're saying in 2024, right now the parlor game on Wall Street is when will the rate cuts come? March, April, May? You're saying no, the Fed may actually still have to hike rates next year?
Yeah, I wouldn't be surprised. I'll give you 50-50 odds that there's another rate hike. In other words, what I'm trying to say is we can forget about these rate cuts. I don't think there's going to be any rate cuts in 2024 unless that unknown breaks things that would change it. But I still wouldn't be surprised if we get another rate hike, because I don't think inflation has been completely vanquished. I think it bottoms in the 3 to 4% range. We're at 3.2 right now. And the Fed's going to find that unacceptable. And that's why I think it might open the door to another rate hike, especially if stocks continue to move higher, wealth effect, making people feel wealthy, spend money, more inflation.
All right, I want to pick up then on the sort of economy, right? The economic surprise. Now, there's a lot of them. City's got one, Bloomberg's got one. I've got the Bloomberg economic surprise. Let's say this economic surprise index starts to go up, right? How much pressure do you see the stock market coming under? I mean, is there a certain point where you think the S&P would have support no matter what?
Yeah, no, I think that you're right, that this is an environment that everything is about interest rates. Let's go back to October 27th, which you mentioned before. 280 companies in the S&P had reported. On balance, those were good earnings numbers. And where was the stock market? 10% off the high. Then what happened after that? The quarterly funding announcement pushed interest rates down, and the market took off. So in this environment, I could give you 280 good earnings reports, or I could give you lower interest rates, and the market is saying, forget your earnings reports, I want lower interest rates. So if economic surprises go up, meaning the economy is doing better and puts upward pressure on interest rates, then the stock market will hit serious headwinds.
All right. Hey, Jim, always love your work. It is absolutely fantastic. Thank you very much, my friend. Hope you had a great Thanksgiving.
Thank you. You too.
All right, folks, here's a question for you. What